What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So you guys wanted me to do reviews on dividend stocks, specifically car stocks. So I have 3 companies I'm going to review for you guys and go over their dividend history. So if you're new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. And let's check these stocks out right now. Let's start with Toyota. They're sitting at 159.14 with a dividend yield of 1.58%, a PE ratio of 10.59. Volume is 279.53K. The market cap is 260.88 billion US dollars. Year range is 152.39 to 213.74. Its previous close is 159.14. The one thing about these guys are they're one of the largest automobile manufacturers in the world. So they produce about 10 million vehicles per year. That's one thing about these guys that make them very interesting. And of course, they're trying to compete with Tesla. Everybody's trying to compete with Tesla with having electronic vehicles. So that's one thing that these guys bring to the table. So I'll go over their revenue and their dividend history. I'm going to kind of do a quick speed run with these guys, as well as Ford and Honda. Let's check this out. This is in millions US dollars. And by the way, I do own a Camry. I do like the Toyota products as cars. 2016, 235,749. 2017, 256. 2018, 264. 2019, 272. 2020, 275. 2021 pandemic hit 255, and then 2022, 279. So that's attractive. There's an increase in revenue in 2016 to 2022. People like Toyotas because of the miles per gallon, and those cars last forever. My goal is to get to 200,000 miles on my car, then get a new one. So that's what I like about Toyotas, is the longevity. And of course, why buy a brand new car when it depreciates versus putting money in a mutual fund and getting the net asset value to increase and the price per share to increase and everything. So brand new cars are not very good investments, by the way. Let's check out their dividend history. Let's check out this jump. 2010, it was 44 cents, and you can tell this is a semi-annual dividend stock. 2010, it was 44 cents. Then 2011, it was 67 cents. Then it jumped to 47. So you can tell it's just semi-annual. But 2013, 113, 118, then 113.79. 157 to 195, then 156 to 194, then 162 to 198, then 179 to 218, then 186 to 296. So the payout ratio is 21%. Number of dividend increases in the last 5 years is 6. And the annualized dividend growth in 5 years is 2.62%. So if you bought one share, you made $3.92, and the dividend yield is 2.47%. So to me, with them keeping up with the S&P, they aren't really a good dividend growth stock that I like, with increasing their dividend, and the price per share is pretty good. So they're better off being a traditional and/or Roth IRA stock. And again, this is not financial advice for entertainment purposes only, disclaimer in the description, but semi-annual, 2.47%, I don't know. I'm not feeling it as much. Now, some people do own these guys in their dividend portfolio, but just not my type of tea. I'm sorry, not my cup of tea as a dividend stock. Let's jump to Honda. Now we're looking at Honda. HMC is a symbol. It's sitting at 25.13, a dividend yield of 3.93%, PE ratio 8.35. The average volume is 1.40 million. Market cap is 45.41 billion US dollars. Its year range is 23.93 to 33.42. Previous close is 25.13. Now these guys are a little bit more unique. Let's go over these guys. So I'm going to go on Wikipedia real quick. They make it 10 times easier. So the products they have are automobiles, motorcycles, ATVs, engines, which is huge, robots. They're starting to do robots. They have some aircraft, they have mountain bikes, and some of the things they have also is their compressed natural gas, their alternative fuels, their flexible fuel. They have hybrids. They have a hybrid electric one, so hydrogen fuel cell. plug-in electric vehicles, and that's what makes these guys a little interesting as a company. So it's not just cars, but they also have motors and everything. They're a little bit more diverse than Toyota. Now let's check out their revenue and their dividend history. The revenue in 2016, it was 121, and this is again millions US dollars. 2017 130, 2018 138, 2019 142, 2020 137, then 2021 123, then 2022 it was 129. So they're still going over revenue and everything, but they make so much money and it's ridiculous. But let's check out their dividend history. This is what makes these guys a little bit stronger than Toyota as a dividend stock. Let's start in 2011. It was 18 cents. Then 2012, it was 17 cents to 22 cents. Then 2013, it was 18, 19. 2014, it was 17 cents. Then it hit 18 cents. And then 12, 5, 14, it was 16 cents. Then it cracked 18 cents. And then it was 19 cents. And then 20 cents. And 21 cents in 2019. 2020, it was 20 cents. Then it went down to 8 cents and 15 cents. You can blame the pandemic. And then they went from 2021 to, looks like a quarterly dividend stock right now, to a semi-annual dividend stock. So one thing that's a little bit of a turnoff, again, the annualized dividend growth in 5 years is 16.84%. Now, it's a little bit of a scatter bomb. Okay, it's not where it was really attractive jumping up. It's a high yield dividend stock. Payout ratio is 43%. It says the number of dividend increases in the last 5 years is 12, but you see the scatter bomb effect. Again, I think this annualized dividend growth in 5 years, sure, it's showing statistics, but it's a little bit misleading. 6.29% dividend yield. And if you bought one share, you made $1.58. So again, with its price, it's $24.81. Now, Zacks lists them as a strong sell. They have a lot of diversification. That's just one that I'd look at. I didn't buy anything. I never bought these guys. I never considered buying them, but their dividend trends can be a little misleading. They do sell a lot of products and they are in demand. So that's what has these guys a little bit attractive as a dividend stock. They're just not my cup of tea. So Toyota and Honda, I don't think so. I'm going to go after Ford next. So Ford is a very interesting one that many dividend investors love. So we'll go over these guys. This is one dividend stock that many investors capitalized on when the dip happened and they suspended their dividend. So they're sitting at $11.48, a dividend yield of 3.48%, PE ratio 4.03, average volume 61.01 million US dollars. The market cap is 46.15 billion US dollars. The tier range is 1090 to 2587. Major dip. Previous close is 1148. So let's check these guys out revenue wise and dividend history wise. I'm not going to go in depth with Toyota and Ford. We already know what they carry and bring to the table. I'm just doing a brief dividend stock analysis video on these three stocks, and I go over their revenue as well. So let's check out the revenue. Okay, so this is in millions US dollars. 2015 it was 149, 2016 it was 151, 2017 156, 2018 160, 2019 a little bit of a decrease at 155, 2020 can blame the pandemic, 127, and then 2021 136. So there is slowly they are making a rebound. So a few things with Ford that I'll go over with their dividend history. Now there is a decrease in revenue. Competition is pretty serious between Honda and Toyota and Ford as stocks. Now some people own all three dividend stocks. Some people prefer one of them just because of their American company. Some people actually just love writing the dividends on Ford and Honda. And I'll go over the dividend history with Ford. We'll start in 2007. So 2007, obviously, you can blame. Yeah, I mean, these guys got themselves out of debt. I got to give them kudos. They weren't begging on their hands and knees like General Motors and everything to get out of debt from the government. I'm pretty sure you can quote me if if I'm wrong, you can correct me, but I'm pretty sure those guys got themselves out of trouble their own way and they didn't beg on their hands and knees for the government. So that's one thing that I have to give these guys props with. So 2012, they were 5 cents. So this is their dividend. 2013, it was 10 cents. In 2014, it was 13 cents. 2015, it was at 15 cents. And it just has never increased its dividend. Then they resumed their dividend in 2021. Then 2022, they were 10 cents. So the dividend growth in 5 years is negative 8.47%. You can blame the pandemic. If you bought one share, you made 40 cents with a 3.48% dividend yield and a payout ratio of 31%. So all three of these dividend stocks, I'm not interested in. I think Toyota is a pretty decent traditional and/or Roth IRA stock. It's actually in line against the S&P, which makes them attractive. Ford is a dividend stock. I don't like those guys because they have not increased their dividend in a long time. I will give them props with them getting themselves out of debt and a lot of trouble. I need my coffee to kick in a little bit. But in Honda, with their dividend increases, it's not too bad. So of the three dividend stocks, again, this is not financial advice, but Honda looks like the best dividend stock of the three because their diversity, the revenue's not bad, and they kind of are a little bit of a scatter bomb. Ford hasn't increased their dividend. Honda has. Toyota is extremely slow with increasing their dividend. Problem with Honda and Toyota also is a semi-annual. Honda went from quarterly to semi-annual. So, you have to be a really good semi-annual dividend stock with dividend increases to convince me. The one is Diageo. That's the one with an alcoholic. That's a spirits, wine and spirits. So they own like Crown Royal or Crown Royal. They own let's see what else. Tanqueray. They own a lot of those type of alcohol and liquor. I'll probably do a video on those guys eventually. That's probably the best semi-annual dividend stock I can see that's really powerful. I know AstraZeneca is a semi-annual dividend stock. I did own them, got rid of them. I'll have to do a review on those guys too as well. I may have to do a review on semi-annual dividend stocks, but of the three, I'm just not attracted to them. I like the real estate investment trust. I like the financial sector. I like an increase in revenue. I like an increase in dividend hikes, and they're just not. These three dividend stocks are not my thing. So let me know what you think of this video. If you own any of these three dividend stocks, let me know. Do you like them? Are you going to be long in them? Are you just going to reinvest? You tell me what you think. And if you find a better car stock, okay, mention that and I'll do a review on it. And let me know what stocks you want me to do reviews on again. So you guys take care. I'm going to do a quick video tomorrow on 2 real estate investment trusts that are pretty hot out there. And then I'm going to get ready for my midterm. So take care and have a great Thursday.